A vault student made 510% in one day, and you won't believe how easy it was. All it took was understanding one very simple concept. And if you stick around, you'll see exactly how it's done. Our mission is to help you build wealth one video at a time. Welcome to the vault. What's going on, family? It's your favorite headless YouTuber back again with a brand new video. And as always, before we get into it, let's get started with some Monday motivation. Knowing your worth is knowing the difference between what you're getting and what you deserve. In today's video, we're going to talk about another elementary concept that we use daily to make money in the markets: rectangles.
You serious?
And I'm going to show you exactly how I helped one of my VIP mentees inside the vault cash in a total return of 510% in one day. And of course, I'll top it all off with our weekly watch list. If you're new to the channel and like what you see so far, show us some love by liking the video, subscribing, and making sure notifications are turned on so you don't miss any new content. And without further ado, let's get to it. Assuming we all know what a rectangle is, let's get right into exactly how we use it to make profitable decisions in the stock market. First things first, we know that the market only moves forward in three directions: up, down, and sideways. As talked about previously on the channel, link above, we track upwards movement with an uptrend line connecting higher lows, and downward movement with a downtrend line connecting lower highs. But what do we do when the stock's price isn't making any new highs or lows? Same thing. We just draw a line connecting the highs and the lows. What you can see is simply support and resistance. And if you look more closely, you'll see that the stock's price is trading in a rectangle or a box. This sideways movement is also referred to as consolidation. So now what? We wait. We wait for a candle to break above or below the rectangle, and we just play it in that direction. Just that simple. Two things to note. Remember that a break by our definition is an open and close or a full candle on the other side of the key level in question. So in this case, an open and close or a full candle above or below our rectangle. Number two, a good practice for trading what some people call box breakouts is to look to take profits on the second candle, because what we found is that at the bare minimum, you'll get at least 2 to 3 good candles in the direction of the break. Now for our example, let's get into how a member of the VIP family made a 510% return in one day using what we just learned. Alright, so the day in question was this past Thursday, October 13th. And just so you can be more clear on what's on your screen here, the extended trading hours is on. So basically we get to see what happens after the market closes and before the market opens. So what we did during pre-market is we used the rectangle drawing tool and we boxed it up like so. And as I said before, now all we did was wait. We wait for a full candle below or above this box. There is a prime example of why we say we want to break below or above. In this case, you could have gotten faked out if you got in prematurely because you saw a red candle start to peak out. So what you want to do is wait for a full candle. If it's below, you want a full red candle below this box before you enter for your puts, or a full green candle above this box for your calls. So this is where we entered. It's around 8:47, I believe. Yeah, so somewhere in between these two candles, we enter for our calls, and we ran the momentum up. Like I suggested before, we always recommend, especially with this box strategy, to expect to be out within the next 2 to 3 candles. So in this case, we got in on this 850 candle. We would ride it 1, 2, 3 candles over. And I guarantee you, I promise you, that is an amazing return on your money if you capture a move like this. This particular VIP member is a much more experienced trader, so he has already fine-tuned his trading plan and his strategy. So he did not get out on that second and third candle. What he did was he had a stop loss that he set, which I want to say was around here, if I'm not mistaken. And he stayed in his position until it reached his stop loss. And what you can see here actually is that we've created another consolidation zone. So with this, we just boxed it up again. Say we put it around here. So again, same concept. If you missed the first entry, you can wait for another entry here. Boom. We get another bullish break above the box. If you weren't in before, you can read it. And as you can see, same concept. So from this move from market open at 8:30 to 10:40, he was able to eke out a grand total of 510% from this move. Again, we do not expect to make home runs like this on every play. But what we do is we make a trading plan and we stick to it day in, day out on every single trade. In this case, his trading plan was to stay in until he reached his stop loss. And as the stock continued to go up, which I didn't mention earlier, he would just move his stop loss up so he wouldn't give back too much of the profits that he had already gained. In this case, he actually sold about here because 510%, why not? At that point, you're being extremely greedy, expecting anything more than that. And just to put things in perspective, in case that percentage isn't really registered, imagine putting in $500 and being able to pull out $3,050. That's a total return of $2,550 in a matter of 2 hours. And again, I'm going to reiterate this over and over and over. We do not expect to make 510% on every trade. But when we can, we're obviously going to take advantage of it. Sticking with our plays from last week, let's get started with Tesla. Tesla did exactly what we wanted it to do. We had 2 levels identified, 216.17 and 206.73. If we were to get a bounce at the 216.17, we would expect Tesla to run to at least 235.35. And if we got a bounce at 206.73, we would expect Tesla to run to 225.02. So what happened? We did not get a bounce at 216.17, but we did get quite an accurate bounce at 206.73. And if you look at this candle, the low for this day on October 13th was 206.22. Just 50 cents away from where we expected it to bounce. I count that as a win any day. So if you stuck to our plan from last week, we can bring it down to the hour time frame. We got a nice bounce off of this 206 line here, followed by a run up to our 225 line here. Going forward, what I see for Tesla, being that it did close below this 206.73 line that was important for us last week. On the bear side, what I would want to do, if we do get a open below 206.73, I would want to buy my puts either one or two scenarios, a break below 199.33 or a retest of 206.73. So basically what that would look like, just to give you a visual, is Tesla breaking below here, possibly bouncing off the 199 line to come and retest it again. Then we should see if it does. If we do get that retest, that'll be my signal for puts, and we can see a nice move down to the 189 level here. Like I said, if we do try to get some type of bullish run on Tesla this week, like I said, I want to see it open above the 206.73 line. Again, that could be, we want to play it to 216.17 and then to 225 and then to 235, assuming that we reach these levels. But we'll just kind of see what the market wants to give us this week. Moving on, we're going to go look at AMD, of course. Moving on to AMD. As we can see, AMD did break our 59.80 line to start the week and used our 55.82 as support. It was unable to break below the 55.82 or back above the 59.80, giving us, on topic of what we spoke about today, our box, our consolidation, our rectangle here. There are no new highs or new lows. The high was 59.80, the low was 55.82. Technically 54.57, but in the general area of 55.82. So for a visual, we'll box this up. So now we wait for AMD to tell us which direction it wants to go. With this, if it breaks below the 55.82, below this box, a full open and close, a full candle below this box will give us an indication that we're going down to 51.25 or lower. We want to play the next 2 to 3 candles for puts. If we get a green candle above, a full green open and close above the box, we can see ourselves running to the 66.02. We want to see 1 to 2 candles leading us in that direction. And if you were to stick to our plan from last week's video, we wanted to play with a break below 66.02 for puts, which we got on Monday. A break below 66.02 to open on Monday. You could have played puts at least down to 59.80. You could have re-entered on a break below 59.80, which we also spoke about, and wrote it down to our 55.82. So 2 opportunities for puts, both happened on Monday, that you would have been able to make great profit on by Tuesday. Now let's take a look at Square. If you remember from last week, we were watching the 56.01 level. On the hour is what we wanted to pay attention to. What we saw on Monday is that we got a few short fake breaks below 56.01, but they did not hold and they did not officially break into the pre-market Tuesday morning. So since this move happened during the pre-market, obviously we wouldn't be able to catch it ourselves because it's happening before the market opens. So instead of at market open trying to chase this stock further down after the break below 56.01, and keep in mind it broke 56.01 and the 53.90 level. So in this case, we will wait for a retest, which is exactly what we got. We fell to a low of about 52.68, and we made a nice run back up to our 56.01 level. It was rejected from this level. Then we got this nice red candle that confirmed our reversal, our rejection off of this 56.01 resistance. And from there, we can enter for puts to catch the move that we had already identified for the week. And at this point, I'd be looking at this area right here as a new support area on our shorter time frames. It's 52.68. So what I'll be watching with that information on Square this week is this 52.68 level. It was such strong support for Square last week that I would expect for it to be a key level going into this week. So we could potentially see a retest of this level for a pop down to our 49.82, or we can see a break of this level that could give us a nice enough boost to get back above our 53.90 and potentially the 56.01. And that's pretty much it. If you haven't noticed yet, it's really not a complicated concept. If you can remain patient, disciplined, and consistent with your strategy, you have nothing to worry about. That'll do it for today's video. Just remember, don't be afraid to fail, because it is in the darkness where we learn to appreciate the light. No battle is won without a fight. Failure should only change the strategy, never the goal. If you've enjoyed this video and want us to make more videos more often, you know what to do. Be sure to hit that thumbs up button below and subscribe to the channel if you haven't already. Also, comment below your thoughts or questions to let us know how we can continue to improve the channel. This channel and all of its content are made for you. Thank you for watching this video, and I'll see you in the next one.